Question number 2. I am looking at purchasing a house. How do I figure out the math options and tax implications? Okay, number 1, when you are looking at purchasing a house, make sure you are not purchasing a house just for the tax benefits. Do not do that. I have personally heard realtors tell people, if you purchase this house, it will help reduce your taxes. That is not always true. In fact, in many cases, it's more untrue than it is true. Basically, once the Tax Cuts and Jobs Act was enacted and the standard deductions were increased, I think for married filing jointly couples right now, that number is like $27,000 or something like that. So that means when you purchase a house, and that if that house is going to, and we're speaking of a primary residence, not a rental property, a primary residence. When a realtor says, hey, this house is going to help you save money on taxes, what they mean is that the interest that you're paying, the property taxes that you're paying on that particular home is going to exceed your standard deduction. Well, if you're married filing jointly, that means you would have to be paying more than that $27,000 number per year in interest and property taxes. And in many cases, for quite a few Americans, they're not paying that much in interest and property taxes. This does not apply to people who are living in California, New York, Connecticut, states like that, okay? We're talking the rest of America. We're talking the rest of America outside of those core states. They're probably not paying, the average person is not paying that amount of money in interest and property taxes per year. So that means you're not going to be able to take advantage of that particular deduction. So that's the first thing that I want you to keep in mind. Do not purchase a primary residence simply for tax purposes, because unless you do that math and you can figure it out, it may not benefit you. Now, if you do purchase a home for primary tax for that purpose, and maybe you also are a heavy tither at church, maybe you do give that 10% at church, you're giving $10,000, $15,000 a year, that might tip you over. When you combine all of those items that's listed on the Schedule A of the itemized deductions, that might tip you over.